Pamela Grutman. I am a tax lawyer that works in the art world. In addition to tax work, I work with arts and cultural organizations and helping them with their governance and formation issues. And then on the tax side, I focus on trust and estate work, estate tax and gift tax issues, and then income tax and sales tax, which is obviously a really big issue in the art world. So I am affiliated with Olsaf Cahill, Casu, and LLP, which is a premier art boutique art law firm, and very pleased to be with them now.
Yeah. Well, great. I'm glad that you're here to talk about everyone's favorite subject, tax.
Thank you. The fun topic.
Exactly. And I know that we were going to specifically focus on sales tax and use tax. Mm-hmm. I thought to begin, you could just simply define those two for the people that don't know the difference between sales tax and use tax. Maybe just talk about what the line is between the two and how the two are divided.
Yeah, absolutely. So sales and use tax is a state tax concept, unlike income tax where you have the federal component in addition to the state. Sales tax is the way that states raise revenue on the purchase of goods and services. So in the art world, tangible property, which is artwork, is subject to sales tax and use tax. But sales tax is, for most of you are probably familiar with walking into a store when we used to be able to walk into a store, make a purchase, and you look at the receipt and there's this line called sales tax, and it's a percentage of the goods that you purchased. And that's the same way it works in the art world. You walk into a gallery, and if you were to walk out with that piece of artwork, you would be charged sales tax. What's interesting about sales tax is that it's usually destination based. So if for some reason you walk into that same New York gallery and say, actually, I'd like this work shipped to my Delaware storage unit, and Delaware is a no sales tax state, it's a no tax state, then sales tax would not be charged because based on the destination of where that work is traveling. Sometimes people may be familiar in Europe of a VAT, a value added tax. Mm-hmm. It's kind of the same thing in the States when we talk about sales tax, that it's a value, it's a tax on consumption, on the goods and services that one is consuming. And so in many ways, it's a very progressive tax. People who buy more expensive things pay more sales tax. But in other ways, it's not a progressive tax because, people who can afford to pay more may decide to, have a storage unit in Delaware and then not pay the sales tax in the high sales tax states. So the way that the states have sort of said, well, wait, our people are going, there's cars, there's planes, there's trains, there's ways of leaving the state for commercial activity. So why should someone who lives in, Massachusetts be able to drive to New Hampshire, which is a no tax state, make a purchase, maybe go buy a new computer, and then drive back to their home state of Massachusetts and not have paid that sales tax? That creates an unfair competition between states. So use tax is the counterpart to sales tax. So if you did that transaction where you go across state lines, or let's go back to our art collector who says, hey, I want that artwork shipped to my Delaware storage unit, avoid sales tax. But then a year later, 10 years later, 100 years later, it doesn't matter how long in New York, you decide to have that piece, that artwork, delivered to your New York apartment or your Hampton summer home, you're subject to the use tax. You don't get it. There's no get out of jail free card here. You're expected to self-report that use, and that now your artwork is in New York and you're obligated to pay the use tax. So they're kind of a yin and yang. They're supposed to work together, the sales and the use tax.
So I think you touched upon this a little bit earlier, but how are both sales tax and use tax paid? I mean, you sort of alluded to it, but I thought it'd be
Let me
Right.
actually
Make it clear.
answer that question. So if I'm a collector and I'm buying from a dealer, there's going to be a line on my invoice called sales tax. I'm going to pay the dealer that amount. And now they are obligated to pay that amount. Usually it's a quarterly basis to the state's Department of Revenue, whatever it's called in whatever state they're in. So once the purchaser sort of walks away, if they've given their funds to the vendor, they should be in the clear. Of course, there have been cases where, the vendor didn't fulfill their duties. So which is why it's really important to keep all of your paperwork up in order, because if you've paid it, you want to be able to prove that you've paid it. In order to not pay the sales tax, you have to use a common carrier. So
Right.
the UPS, FedEx, what you think of as a shipping company. In the art world, there are a lot of private shippers, that are not considered to be common carriers, because to be a common carrier, you have to have pricing that's listed to the public. You need to be accessible to the public. There's, a couple of factors. So if I'm the purchaser and I arrange for, for someone to come and pick up the work that's not a common carrier,
I'm gonna come collect your work.
Right. If I say, Heather, will you go and collect this work for me? You're in New York. You go to the gallery and pick it up. You're now my agent. And even though I'm not in New York, for the purposes of this example, I'm now subject to New York sales tax. And so that's become a complicated issue. So if the gallery arranges the shipping, you don't have to even get into that line of questioning about who's actually the shipper. If the gallery arranged the shipper, then you will, and you ship it out of New York, then you're not subject to New York sales tax.
Okay.
But now if I'm the buyer and I'm arranging my shipping, if I don't use a common carrier, I'm still going to be charged New York sales tax.
Right. I understand.
But what we didn't talk about is who is obligated to pay use tax. We did an example of a New York person, leaving New York, buying something, bringing it back. So that New York person, in order for them to be obligated to pay use tax, let's say they bought it 10 years ago and they bring it back. I'm most familiar with New York law, of course. Every state's a little bit different, but they kind of the ones that have use tax operate this way. So 10 years have passed. The artwork was sitting in the Delaware storage unit, and now it's brought back into New York. So there's a look back at that time of the purchase, was the person a New York resident? And resident has a different definition here than it does in the income tax world. In the use tax world, a resident is anyone who has a permanent place of abode, which is a very general definition. And a permanent place of abode is anything that isn't a tent. If you rent a place, you own a place, you have to have a physical place, but it's not your domicile. You don't have to be here a number of days. But if you have a place that you could live in, theoretically, you could be considered a New York resident. You want to make sure you're talking to your tax professionals. Are you covered if you don't intend to be a New York resident? Have you given up your permanent place of abode sufficiently?
And then, so I want to ask one question also about use tax.
Yeah.
Use tax is not only applicable from, let's say I bought a piece in Florida and I brought it back and I had it shipped to New York. It would also be applicable if I bought a piece in Brussels and I had it shipped to New York. Is that correct?
Yes. So if the Brussels gallery, didn't charge New York sales tax, which it wouldn't, then yes, you would be obligated. Even you brought it back in your suitcase or you had it delivered to New York, you would be required to pay the use tax because New York is the location that you're using it in. The vendor, the store, the gallery, the online retailer, they're the ones with the burden of knowing if they have to collect the tax from the purchaser. In 2018 with Wayfair, we now have these hard lines about what constitutes economic nexus. So even if the physical nexus characteristics can't be qualified, the state can just simply said, you did 200,000, I guess the threshold in most states is about $100,000 worth of transactions. So you don't have to have the people, you don't have to have any kind of physical presence. They just have to look at revenue and be like, you made $100,000 of sales here. These have now been in fact, in some states for 2 years. So, there was some gradual bringing it, getting people up into compliance, but now it's expected that everyone knows what the game is and everyone's playing by the rules. And of course, there hasn't been any public cases or no one's publicly been shamed for not complying, but I'm sure it'll just be a few years. We'll see people get hit pretty hard with these things.
Yeah.
So the tax that most people are probably familiar with is income tax, the tax that everyone pays once a year, theoretically. As individuals, we file our 1040s. And so if a work of art is sold either by an artist, a collector, a dealer, there is going to be income tax assessed on those sales. But those three categories of people are treated differently. So an artist who sells a work, they're going to be selling that artwork out of their inventory, and an artist will pay income tax at ordinary tax rates. And so when we talk about ordinary tax rates, we're talking about the marginal tax rates that most people are familiar with. Right now, our highest marginal tax rate is 37%. If you're a collector and you've held that artwork for more than a year, then you will get preferential treatment on the sale of that work, because it'll be treated as a capital asset, and you will pay capital gains tax rates, which for a collectible work of art is 28% currently. All of these are set to change and expire at the end of 2025, but we still have a few years. We'll see what happens before then. The way that a capital gains is determined is you take the sale price and you subtract, the basis. So the basis is what the collector paid for the artwork, and the capital gains rate is applied to the difference. For an artist or a dealer who's also selling out of inventory, then they would do the same, but so a dealer's basis would be what they paid for the work, and then they would multiply that by 37% probably. An artist, on the other hand, their basis is only the cost of materials. Artists don't get to count their time. So if it was literally, pencil on paper, you may have, a $10 basis in that work. Although obviously some paper is more expensive than that. Yeah. But theoretically, the artist is going to have a much lower basis, and they're going to pay tax on the entire spread, almost zero to whatever they sold it for.
And the amount that the artist is taxed upon minus that basis is the total amount that they were given by the gallery or dealer or collector.
So an artist is in the business, if they have a profit motive when they sell their work, they'll have expenses that they can deduct, of course, but their revenue will consist of their sale proceeds, whether they sold it themselves or through a gallery or through some online platform. But yes, their revenue will consist of sales.